Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Brie Williams, head of practice management over at State Street Global Advisors, to discuss the most recent survey of how inflation is impacting investors. And of course, that is the key thing that everybody wants to focus on right now. Brie, it's great to see you again. Welcome back to Trade Talks, and explain to us what some of the key takeaways were from the State Street Global Advisor survey.
Sure, and it's my pleasure to be here. Thanks for including me. So we had a lot of great nuggets come out of our investor survey on inflation. And overall, we're all simply spending more and getting less for it. So you see consumers shifting their focus to the impact that inflation is having on their overall financial health. We've seen the percent of individual investors express stronger concerns about the rising inflation level and their overall economic outlook, their personal financial outlook. That's jumped year over year rather dramatically. So last June, we were at 65% of investors expressing concern about inflation. Today, that's reported at 76%. When you have inflation on the rise, then you want to look at other factors they may have concerns with. So reports on the direction of the US economy. You have over 2/3 of individual investors expressing concern with the US economic outlook over the next 12 months. And over half of investors are also showing concerns around, will the current level of my investment value erode? Also, will market volatility continue to be a pressure point? When you have concerns like that, you can definitely see the optimism levels becoming more diminished.
So, Brie, how has it impacted investor attitudes and behavior?
So rather significantly, when you think about what's ahead, more inflation, potential for additional tax hikes, they're likely to continue being strong headwinds over the next 6 months to the US economy and spending and growth. When you have expectations like this become upended for an individual investor, they're likely to look at making some changes. Why do they want to make changes? It's their way of trying to take back some control by taking some form of action. Nearly half of investors report that inflation is a source of stress and anxiety. And 49% say, I don't believe that inflation's peaked yet. You do have a range of very positive economic factors, such as the unemployment levels. But when you think about what's the regular pain point that they're experiencing on a daily, weekly basis, how much am I paying at the gas to put gas in my car? Is it costing us to bring groceries home for the family that week? And you compound that with a more negative outlook that they have on the economy, the majority are changing behaviors. Most of them are likely looking at taking money away from their discretionary spending bucket rather than apply that to some longer term opportunities.
So, how has investor confidence changed?
That's taken quite a hit. Less than half of investors today report that they're confident that they will be able to achieve their long-term financial goals. Unfortunately, when you ask about one's financial outlook for their future, we return to pre-pandemic and pandemic levels. So we have 48% of investors saying that I'm very optimistic. You have 23% saying I'm generally optimistic, where those numbers were at 69% and 18% respectively last year. So the confidence level is going down. With inflation being top of mind, this negative framing that we're seeing in the data is also expressed in more near-term concerns that individuals have, such as, will I be able to maintain my current standard of living? And will I also have the opportunity to continue to retire on my own terms? Less than half of investors are reporting this is a top concern right now. Will I afford the expenses that I have in mind for retirement so I can live it the way I envision it? Finally, we have less than a third of investors that are comfortable with the highs and lows that they've been experiencing in the markets. And that's significantly lower than it was a year ago. And we've returned to pandemic levels. So they've been on a bit of what I would say a roller coaster ride of emotions.
Yeah, it's so interesting, Brie. I read an article this morning talking about retirement and how retirees are going to have to make a pretty significant shift compared to what they thought, what their lifestyle might be like. And to your point, where market volatility, this isn't the only bout we've ever experienced. Sometimes you have to think and put on your longer term hat and use these, downdrafts in the market and pick up, think about your 401k, stay longer term, stay invested, because this is a great opportunity to pick up shares at a heavily discounted price if you're thinking 10, 20, 30 years out.
Exactly. And that long term view creates investment discipline. And we've seen investors make positive behavioral changes. So they are looking at what can I do in my discretionary spending bucket versus pulling away from my 401k contribution or my child's education account. So they are thinking about what to do in real time to protect the investment in their future selves.
All right, Brie, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.